Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
2020 was a difficult year for us all. World economies have crashed. Financial markets showed us again how important it is to be aware of the global economy. And, believe it or not, many people have profited from the movements in the markets. This December, we bring you the biggest open source webinar series for beginner traders to help each and every one of you understand the basics of online trading and investments from industry experts. Learn from the CEOs is the biggest webinar series organized by InstructFX with the extraordinary participation of 5 CEOs of 5 top Forex companies worldwide. Join us live on Monday, the 14th of December at 1700 GMT for the grand opening with an amazing webinar on trading currency pairs with João Monteiro, CEO at Forex. On Tuesday, the 15th of December, trading stocks and indices is the topic of the day with Phil Adler, CEO at ETX Capital, straight from the heart of London. Wednesday, the 16th, the week only gets better with Joe Rundle, CEO at Markets.com for an amazing webinar on trading commodities. Just when you thought that things can't get any better, on Thursday, the 17th, we have the Cryptocurrencies Trading webinar with our surprise guest. Finally, on Friday the 18th, it's your time to shine in the Fidelity Gala Awards, where InstructFX is rewarding you for watching us live with amazing prizes. Join the biggest open source webinar of 2020 and learn what most Forex brokers don't want you to know from 5 reputable CEOs. Click on the link below and reserve your seat for the biggest open source webinar of 2020, hosted by yours truly, Andrew, the Chart Whisperer. Learn, observe, trade with InstructFX.
Boom, and we're live. Good evening, everyone. What's happening, guys? How are you guys doing? Good evening. Welcome, everyone, to the last webinar of the series and the most expected webinar of the series, Trading Cryptocurrencies tonight. How are you guys doing, first of all? How did you find the previous webinars? How is the sound and image? Type your comments, type your questions if you have questions, and let me know how you're doing, how the sound is, how the image is. And we're going to start the webinar in about 2 minutes from now. Let's give everyone a fair chance to join us, as we had quite a few registrations, guys, over the last few days. And yes, we're going to start the webinar very, very soon. Meanwhile, type your questions, type your comments wherever you are. Let me know how you're doing. Let me know if we have sound and image. Let me know if you're struggling with anything. During the webinar, guys, don't be shy. Type your questions if you're struggling. If you have anything you want to ask myself or my guest for tonight. Right, okay, I see some people joining us. We're waiting for more people to join us, but I'm not going to drag the webinar, guys. It's 5 after 7 GMT plus 2, and we should be ready with the webinar by 8 o'clock. So again, let us know how the sound is. I see we have sound and image. I see a couple of comments. Thank you so much for that. Don't be shy, guys. Interact with us. That's why we're here. That's why we're doing these webinars, to try and help you understand what most people don't want you to understand. Right, let's do this. We're going to take a short advert, and then we're coming back live in about 30 seconds to 1 minute with the most awaited webinar of the series, Trading Cryptocurrencies. Stay tuned. We're coming back live in 30 seconds.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, and we're back. Good evening, everyone, and welcome to the last webinar of the series, Trading Cryptocurrencies. My name is Andrew, and for the last 10 years, I've worked in many retail and institutional Forex brokerages in Europe. Join me in this amazing journey and find out the hidden corners of Forex trading and CFDs from 4 reputable CEOs of 4 reputable brokerages worldwide. This week, with the help of 4 CEOs, we bring the financial markets to your doorstep and we show you what most Forex brokers don't want you to know. My guest for this evening started his career in the financial markets over 10 years ago. He worked for some of the biggest Forex brokerages in Europe, and recently, he dedicated a lot of his time to develop real-time applications for fighting financial fraud. In his little spare time, he teaches other people the importance of blockchain technology and the correct use of cryptocurrencies. You can follow him on Twitter under the handle Bitcoin George. Ladies, gentlemen, traders, please welcome my guest for tonight, the man that took blockchain to another level, the economist, the trader, the co-founder of Cyprus Blockchain Association, George Agathangelou, everyone. George, good evening. Good evening, George. Bear with us for a second. There we are. Let me bring you on the big screen. Good evening, George. How are you?
Good evening. Doing great. Fantastic.
How do you feel tonight?
Well, it's one of those days that basically we've been waiting for the last 3 years, and now we're finally here. So you cannot imagine how happy I am today.
I can see the smile on your face. Bitcoin has reached $23,000 yesterday. How do you feel about it?
Yeah, it was about $23,800 this morning, and now it's around 23.5. So yeah, it's I don't know how to describe it. I'm very happy, very happy indeed.
Right. How was this year for you, George? And how was this year for Cyprus Blockchain Association? Because for most people, it was one of the worst years since World War II.
Well, it's quite funny because with all these remote working measures, we see a real use case for blockchain. Actually, let's say it makes the adoption come even faster, because you need to have a solution that is trustless, without intermediaries. Everything is going to be done with the digital mediums right now. So I think that it has actually helped the situation. Although Bitcoin dropped in March, we can see that was a huge buying opportunity for people, and people that understand the technology and they see, they have a longer vision for it. They actually were the ones to take, to capitalize on this opportunity.
Yes, correct. Very, very correct. Now, introduction to cryptocurrencies is the topic tonight. But before we get into the topic, guys, if you have questions, if you have any comments, we're going to have a Q&A session towards the end of the webinar, which will last for about 45 minutes, and we're going to take all the questions. But before we get into the topic of the day, I want people to get to know you a bit better. Tell us, please, when did you start trading? When did you get involved first time in the financial markets, George?
My first contact with the financial markets was a little bit after I graduated from university. I have a bachelor's in economics, so I was looking to get into the financial sector at the time. I was very lucky because back in 2008, it was the beginning of the Forex industry, and there was a lot of companies opening here in Cyprus. So I was lucky enough to find a job within the financial sector. And that's when I actually had my first contact with the Forex industry. And since then, yes, trading has been a passion for me. It's something that I do on my part-time. I enjoy it. I like, following the markets, see what makes, these markets work, how they react, and also be able to, create an additional revenue of income, an additional income stream for myself. So yes, ever since I've been trading as a part-time occupation, and there are times where trading can be a much more profitable, let's say, occupation than exchanging your time for a company.
Very well said. Yes, I'm with you on that one. I did more or less the same thing when I started InstructFX. Now, how come you fell in love with cryptocurrencies? When did it happen?
Well, the real love and passion about cryptocurrency started in 2013 when we had the Cyprus haircut, the deposit levy. So all the deposits above 100,000 euro were removed by bank accounts of people. So back then, my trust into the financial ecosystem in general was hurt, and I was trying to find other ways to preserve wealth and value. So at that time, I bought some miners from China. I started ASIC mining on Bitcoin, and at the same time, I was trying to find crypto exchanges where I could deposit some money and buy Bitcoin. I was unlucky in the way that I trusted Mt. Gox. That was the biggest exchange at the time. And unfortunately, because of the management's fault of the cryptocurrency management, the keys were stolen and the Bitcoins were also stolen from the exchange. And as a result, out of all those Bitcoins that were stolen, only 15% they were able to retrieve. And now we're still waiting for a compensation that is only the 15% of the total amount of Bitcoins that we had back then. But of course, because of the huge price increase in Bitcoin, the amount is, it's much larger than it was back at the time, although we're only getting 15%. So yes, ever since I get in contact with Bitcoin and I understand what it is, and I'm still learning, by the way, because the subject it's a rabbit hole. I mean, if you start learning in Bitcoin and in cryptocurrencies, because also it's such an innovative space, there is always something to learn. So if anyone says that he's an expert in this field, do not believe him. There are no experts. There is only a handful of experts in the world when it comes to cryptocurrencies, distributed ledger technologies.
One name comes into my head right now: Vitalik Buterin.
The genius, the boy genius. So that was in summary how I got into Bitcoin. I love the space. I believe that it's going to bring a lot of benefits to everybody's life. Not only Bitcoin as a store of value, but also the technology behind Bitcoin, because it can be used in specific cases and context, so that we have transparency. We have also the immutable of the records. So we are, in essence, also combating fraud when we're using this kind of technology.
Don't spoil it for everyone. We're going to get to the presentation in a minute. Tell me, are you still trading conventional assets? Because last time when we spoke, you were developing some trading algorithms, some trading robots. Are you still trading Forex and commodities and stuff?
Not really. My interest has focused into tokenized assets. I mean, like tokenized gold or tokenized real estate. I am really in favor of keeping custody of the keys of my wealth. So I wouldn't trust any other third party in order to safeguard my wealth at this moment.
Right. Fair enough. When you started trading cryptocurrencies, because you had a trader's experience, how long did it take until you saw first consistent profits? I mean, can we talk about consistent profits when we're talking about cryptocurrencies, or we're just scalping up and down, up and down?
Well, as long as you're not greedy, yes, and if you're careful, if you are an experienced trader, there are huge opportunities because of the volatility in the market. However, if you are a beginner, it's quite dangerous. Easy come, easy go. The best advice I would have for beginners would be to slowly, accumulate more Bitcoins as time goes by using a method called the dollar cost average. So every week, let's say, for example, you allocate a small amount, you have a view in the market. Whenever you see a small dip, you grab a little bit and then you just wait, hold on to it. And this has been the best, let's say, strategy when it comes to trading cryptocurrencies. Also for my example, because I don't have a lot of time to spare. If I do have time, yes, and I'm going to be in front of the screens, then yes, I will look into scalping. I will look into other methods that I can, grab the opportunity. But if I don't have time, the easiest thing to do is to just buy a little bit, hold it in your wallet, and from then on, you just see how the price increase goes when it comes to cryptocurrencies. Just wait a couple of years, and the growth can be spectacular in some cases.
All right. What would you say is the main difference between trading cryptocurrencies as CFDs versus conventional asset classes like Forex, commodities, stocks?
Well, I would say that it's a little bit different the way that you perform the analysis. Maybe you don't have so much focus on the macro, let's say, picture. And when I say that, I mean looking at what affects traditional assets. When you're looking into cryptocurrencies, you need to look into some other factors as well. Not only the fundamentals, not only the technicals. You need to also look at what's going on when it comes to chain analysis. If you see large inflows into exchanges, that could be a signal for a potential dump in the market, because whales are transferring their coins into exchanges in order to sell them. However, this is the opposite that what we have been experiencing in the last 1 to 2 months. We have seen a huge increase in the outflows from exchanges, meaning that people deposit money into exchanges, they buy their tokens, they buy their cryptocurrencies, and then they withdraw them into their wallets. So this is an indication that they are willing to keep that cryptocurrency for the long term.
Right. Okay. Correct. Very well said. Now, what would you say is one of the biggest mistakes that beginner traders do when? What was your biggest mistake when you started trading cryptocurrencies? Apart from trusting the wrong company, and that is misfortunate, but it happened. What's a big mistake that people do when they start trading them?
When they start trading cryptocurrencies, I would say the biggest mistake is to use too much of leverage. Because the market is so volatile, you do not need to use too much leverage. Even if you was 1 to 2, 1 to 3, that is enough in order for you to make a decent profit. So I would say that the best advice for beginners is to watch for their leverage and just give a little bit more space for your stop losses and take profits. The market is very volatile, and as such, we need to be, a little bit more cautious.
Right. And would you think for a beginner trader, is it a good idea to start trading cryptocurrencies straight away?
Well, it always depends. I'm not sure what is the right answer here. It always depends on the context and also the background experience of the trader. So
no experience whatsoever. Beginner. Very beginner trader that has no idea about financial markets. He just got involved into trading, and he was sold an idea by someone that he could make $5,000 by Friday this time, and they want to start trading cryptos. Is that the best thing for a beginner trader?
I wouldn't say so. Unless they have, they are not greedy, they can be disciplined, only in that case. But again, if you're a beginner, you will lose money in the beginning. I mean, it's normal. As soon as your skills get a little bit better, then your returns will also get better. It's a matter of investing in yourself in the beginning. By that, I mean spending time to get to understand technical analysis, get to understand what moves the market. And again, in the case of cryptocurrencies, you need to take even more factors into consideration.
Very well said. Right. Talking about learning, guys, if you want to learn, instructfx.com, learn, observe, trade. Right, George, let's get into the topic of the day. Now everyone has a bit of understanding of your background and how cryptos work. So, topic of the day, trading cryptocurrencies and blockchain. Are you ready?
Yeah.
Let's crack on with it. Let's see what's going on. Boom. There we go, guys. This is the cover. Lovely, lovely Bitcoin on the front page. As usual, I have to read the disclaimer before we get into the presentation, just to keep compliance of our backs. All information presented during this webinar is from public sources and should be treated accordingly. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take your own financial decision or independently research and verify any information that you see and wish to rely upon, whether for the purpose of making an investment decision or otherwise. We would like to draw your attention to the following important investment warnings. The value of shares and investments and the income derived from them can go up as well as down. Investors may not get back the amount they invested, and past performance is not a guide to future performance. Right. This being said, we can start the presentation, guys, and we're going to start the presentation with the most popular question, the most typed question on Google, I think. What are cryptocurrencies? I'm going to read the definition, and then I'm going to ask George to provide us with a layman terms explanation to try and help everyone understand how it works. So a cryptocurrency is a digital asset designed to work as a medium of exchange that uses strong cryptography to secure financial transactions, control the creation of additional units, and verify the transfer of assets. Cryptocurrencies is a kind of digital currency, virtual currency, or alternative currency. Also, cryptocurrencies use decentralized control as opposed to centralized electronic money and central banking systems. The decentralized control of each cryptocurrency works through the ledger technology, typically a blockchain, that serves as a public financial transaction database. Is that correct, George?
Yes, that is correct.
Would you add something else?
I would add that it's very important to include the consensus mechanism. The consensus mechanism is it's an algorithm in which the various nodes or participants in a distributed ledger ecosystem can actually reach an agreement as to what is the current state of the ledger. Meaning, how many Bitcoins does Andrew have? How many Bitcoins does George have? If George sends half a Bitcoin to Andrew, what will be the next current state? So they need to find a way in which they can agree without having a failure as far as their agreement. So yes, we need the basic difference is that we are dematerializing in a way the need to have a third party, an authority like a central bank in dictating how much money is going to be into the economy and how it is controlled through the interest rates or various other tools. So in this case, we agree in a way that these are the rules of this ecosystem, and by these rules we will abide. Now, there are also some incentives in order to make this thing work. So in the case of Bitcoin, you have the so-called block reward that is provided to the miners of the system, because the miners are the people that are investing hardware and electricity into supporting the system and validating the consensus there.
The transactions, all right. Yeah.
Yes, of course.
Let's find it simple, because this is a webinar for beginners, George. I don't want to confuse people. I want to keep it as simple as possible, as layman terms as possible. And then we can book private sessions, or for people that want to learn more, we can go more in depth. But now let's just scratch the surface, because it's already more complicated than the other asset classes.
Yes.
Right.
Well,
let's move to the next slide.
Okay.
Cryptocurrencies characteristics. Here's where it gets interesting, guys. You've been with us every night this week. You saw all 4 asset classes. This is the 5th asset class, and you can see that every asset class has different contract specification. Now, subject to regulation, we're looking at a leverage of 1-to-1 up to 1-to-5 only for cryptocurrencies. Trading hours are indeed 24/7, 365 days a year. Short answer, George. Why can you trade Bitcoin 365 days a year, 24/7, and you can't trade the other asset classes?
Bitcoin never sleeps. On the other side, you have the traditional assets, which are basically governed by the banks in very layman terms, and the banks are closed every weekend. So
exactly.
Yes, since we have the software and the distributed nature of, let's say, this system, it can operate as long as there is electricity and an internet connection.
Because they are decentralized, and this is what means, by decentralized. Right. They don't have an expiry date. Okay, cryptocurrencies do not have an expiry date. They're not traded as future contracts. And a few advantages of trading cryptocurrencies are reacting to the news. Huge volatility. You saw what happened with Bitcoin. It jumped up $4,000 in less than 24 hours. Also, cryptocurrencies are expected to go up, just like stocks, if the global regulation is agreed. Correct?
Well, yes, I would say that this statement is correct, but we also need to look at the other side as well when it comes to the various announcements as far as banning Bitcoin. So this was, of course, in the past, not today. But for example, I remember specifically September 10, 2017, when the Chinese came out to say that they would ban Bitcoin away. Of course, they cannot do that because there's also a game theory behind Bitcoin. Whoever bans it, just another country will take advantage of that opportunity. So
Yeah.
I want to say that there is also the other side of the coin. If they come out and say some negative news, then you might have a dump in the market. So yes, they are affected by the news as well.
Yeah, I see cryptocurrencies from my experience very similar to stocks. They both react to the news. They're both designed to go up on the long term. Every single one of them serves a different purpose. Yeah, but we're going to get to that in the next slide. Right. Slide number 5, the purpose of cryptocurrencies. For example, we're going to start with Bitcoin, the most known cryptocurrency. Bitcoin is meant to replace the fiat currency, the physical money, the paper money. Ripple, for example, has another purpose. It's designed to speed up the banking process. Ethereum, on the other hand, offers a decentralized platform to build apps, run smart contracts, and generally act as a supercomputer. And its platform aims to be censorship resistant and open for all. So far, is the biggest DApp and smart contracts platform. And then we have Dash and Monero, which again have different purposes. Dash, for example, provides fast transactions, sometimes instant with instant send. And Monero uses CryptoNote tech to create a truly anonymous and private cryptocurrency. So every cryptocurrency, just like stocks, has a different purpose, serves a different purpose, has a different goal.
They may serve a different purpose, but they're so different than stocks in the sense that you don't have one person behind being the CEO. And of course, there are some tokens like that. But when we're talking mainly about cryptocurrencies, we're talking about a decentralized governance ecosystem in which the main, let's say, utility will be to act as currency. Then you have utility tokens, and then you have the so-called security tokens, which are much closer to stocks in this way, because they may also provide you with ownership of a project. So you need to make this clarification for people to understand that there are various categories of cryptocurrencies, and that we need to understand also what is the meaning behind them when we're talking about specific utility tokens, cryptocurrencies, and also the security tokens.
Wow, very well said. A lot of information. Right, let's move on. Let's move on to slide number 6, guys, and see how Bitcoin looks like. This was, again, probably one of the most searched words on Google. How Bitcoin looks like. Well, that's how it looks like. Basically, when you own a Bitcoin or a token or a coin, you're going to get a public key and a private key. Okay, the public key is like your IBAN from your bank account. You can give the public key to anyone to send money, to receive. And the private key must be stored in the safest place on earth, because that is used to send money. That is your key to your bank account, basically. That's your password to your bank account. Okay? What would you add on top of this, George?
Well, I would give another example. Imagine your email address, for example. So you have the public key, that is your email address, and your private key, which is essentially the password to control that email address. And from then on, you can send email, or you can send transactions by actually signing the transactions with your private key. So this is another way to look at it.
All right. Thank you for the explanation. Let's move on to slide number 6, guys. This is how Bitcoin looks like. So Bitcoin is nothing else but a long code. Yeah, as you can see here, this is Bitcoin. This is how Bitcoin looks like. Yeah, it's not that gold coin with a B on it that you see. That's just a symbol, correct?
Yes, that's correct.
All right. All right. Slide number 7, guys. How are cryptocurrencies created? I got a lot of questions on that. An initial coin offering, which again takes me to the similarity between cryptocurrencies and stocks. An initial coin offering is the type of funding using cryptocurrencies. Mostly the process is done by crowdfunding, but private ICOs are becoming more and more common. In an ICO, a quantity of cryptocurrency is sold in the form of tokens, or coins, to speculators or investors in exchange for legal tender or other cryptocurrencies such as Bitcoin or Ethereum. Now, here's where it gets interesting. An ICO is nothing but a business idea, a business plan, okay, which, if you put it in writing, that's called the white paper. At that point, and George, please correct me if I'm wrong, the business plan is almost useless, because there's no value in it. The business plan will only take off when investors invest in the initial coin offering, Bitcoin or Ethereum, to give the owners of the ICO the opportunity of exchanging Bitcoin or Ethereum, some of it, into cash and starting the business. Correct?
That is correct. What we also need to mention a few things about ICOs. ICOs was a thing of the past, in the meaning that we saw this trend coming in 2017, where we had the most ICOs ever in history. After that, we saw that because of the large volume of scammers entering the space in order to take advantage of the crowdfunding capabilities of ICOs, we had regulators putting specific rules about crowdfunding. And at the moment, the ICO, the so-called ICO, has been converted into the IEO, Initial Exchange Offering. And in this case, you have large exchanges facilitating the crowdfunding and also making sure that the company or the project satisfies all regulatory requirements in order for the crowdfunding to take place.
That is one of the best points I've heard this week in all the webinar. Thank you for that.
ICO right now has come to mean a very bad word. So there are no longer any ICOs. There are only initial exchange offerings, IEOs, taking place for launching of tokens and listing on exchanges.
Yeah, because in that moment, the exchange kind of guarantees the token is legit. Yeah, versus an ICO, which is a business idea.
Exactly. In essence, these projects are taking the reputation of the exchange, and the exchange conducts all the due diligence for the investor before they even provide access for that product. So in this way, they can satisfy also the regulators and make sure that the consumers are protected.
So if we see a banner on social media or something, invest in this ICO, this is an ICO, we should stay away from it. Yeah, it's probably a scam.
Stay away from it. Yeah.
All right.
Just crowdfunding, let's say, attempts right now are being done by the large cryptocurrency exchanges.
All right. So only go for the ICOs that are listed on a big cryptocurrency exchange. Otherwise, if you just see the term ICO, stay away from it. Yeah. That's a very good point.
Again, you will need to conduct your own research. By having the exchange offering you a product doesn't mean that that product is good. It just means that they have check the checklist of the regulator, they receive their money for their marketing, and they're now offering this product to the client. You need to also conduct your own research and see if it's really profitable in order to invest in any of these projects. And again, there's always a risk.
Yes, correct. But the risk is mitigated, let's say, by the exchange versus just someone that boosts a post on social media saying, this is my ICO, invest in my company. Yeah. All right. Let's move on to the next slide, guys. Oh, George, what is blockchain? A blockchain is a growing list of records called blocks, which are linked using cryptography. Blockchains, which are readable by the public, are widely used by cryptocurrencies. Also, blockchains have been proposed for business use. Each block contains a cryptographic hash of a previous block, a timestamp, and transaction data. By design, a blockchain is resistant to any modification of the data. So how should we put this in layman terms? I see here I have a simple definition. Blockchain is a decentralized, distributed, ledger-based, encrypted digital platform that records transactions in the absence of trust.
Well, I would put it in very simple terms. Instead of having one central server communicating information to other nodes that are connected to the central server, you have the nodes keeping a history of the central server by themselves. And because they are all connected with each other, if one goes down, they can just go to the next one, and they can keep maintaining the information up to date. And by doing that, basically, we are adding one block on top of the other, and each block contains inside transactions. So by building this blockchain, we can make sure that all the links are linked together. How? We just, in very simple terms, we put a digital fingerprint of the previous block in the current block, creating a chain of blocks, a blockchain.
And leaving a track, leaving a trace. Yeah. So blockchain is a database, for all transactions that happen with cryptocurrencies.
Another very important thing is that if you change a little bit the fingerprint, you will need to change the whole chain of blocks up to that height. So that means that you cannot perform changes on the blockchain without everyone knowing. Once they know, they can go back and see, well, what's going on here. There has been a tampering of data. So in that case, you have the so-called forking of blockchains and continue with a different history.
Okay. Now, this is what blockchain is. A huge database that records transactions. Now, question, George, can the blockchain be altered in any way?
Well, it can be altered. However, the incentive to do so and the capability, the ability of doing so is very limited. So, yes, theoretically, yes, it can be tampered. But people will know about it, and they will act upon it, and they will change also the history in that case. There is also cases where, let's take, for example, the Ethereum DAO and the hack that occurred there. So in that case, because the Ethereum contract, let's say, was hacked, you had the forking of the Ethereum into Ethereum Classic and the Ethereum, let's say, blockchain. And Ethereum Classic, in essence, because it contains the actual hack that occurred on the Ethereum DAO, it's considered to be, let's say, the longest chain in this essence, because it actually contains the history of that hack. However, because the community, the developers, the people that were in that accident, let's say, or that incident, they decided that it's better to disregard the block that contained the hack and go back and start a new history. So you can see that even in that cases, there are ways and methods that we can mitigate the problem.
But it's less likely to happen versus hackers hacking your credit card or your bank account.
It's much less because you don't have a single point of failure. So, for example, if we go back to the central server, if I am able to put all my computing power and resources in order to hack that central server, and I am able to find the credit card information of people on that server, then yes, it's much easier than having to, take over 51% of all the tens of thousands of nodes that are out there. It means I will need to perform an attack simultaneously on tens of thousands of machines. Now, you can understand mathematically, this is almost impossible to do.
Impossible, yeah, almost impossible. All right, now we know what blockchain is, guys. Let's move on to slide number 9, how blockchain works. Right, George, correct me at the end if I'm wrong. A Bitcoin transaction generally needs 6 confirmations from miners before it's processed. The average time it takes to mine a block is about 10 minutes, so you should expect the transaction to take around an hour on average. Roughly every 10 minutes, a new block is created and added to the blockchain through the mining process. This block verifies and records any new transactions, and the transactions are then said to have been confirmed by the network. And the image we see in the illustration we see in the right-hand side, I think it's quite good. So, for example, let's say I want to send a Bitcoin to George. Okay, you wish. But anyway, let's say I want to send a Bitcoin. So I upload my request into the system. Yeah. Then it gets verified by 5 or 6 independent algorithms. Yeah. Not people that know each other. It gets cross-checked by these algorithms. If the algorithms decide that the transaction is correct, they're going to push it onto the block. Yeah, they're going to validate it, push it onto the block, and from there on, it goes on the blockchain. If by any chance one of these algorithms, independent validators, let's call them, does not agree with my transaction, what happens then, George?
Well, when we're talking about 5 or 6 confirmations, what we're meaning is that we need to add about 5 to 6 blocks until we have a 99.999999% certainty that this block cannot be, changed in any way. We're not talking about 5 or 6 different algorithms. We're actually talking about one single algorithm and one consensus mechanism that brings all this data about the state of the blockchain in agreement. From then on, it doesn't necessarily mean always 6 times, because some exchanges they are okay with 3 confirmations, in order to register your deposit, because they already see it on the blockchain, even on the first confirmation. They're just waiting another 2 or 3 blocks just to make sure 99% that is not going to go anything wrong. And from then on, you can start trading, yes.
But if, from what I know, if 1 or 2 of them don't validate the transaction, then the block gets pushed back and gets reassessed by the algorithms, correct?
That is not correct, no. No. Because what needs to happen, you need to have just one miner in the end of the day, or a mining pool in the end of the day, to include your transaction within the next block that is going to be mined. If they are the first to find the block and your transaction has been in that block, then yes, it will be registered. And what makes a difference here is how much fees you're paying to the miners in order to push forward your transaction, in order to prioritize your transaction. Again, this is an open economic system. If I want my Bitcoin to reach you immediately, let's say, within the next block, then I will pay a little bit extra in order to make sure that my transaction is included in the next block.
Ah, right. Okay, now I got it. All right, let's move on to, so now we know how blockchain works. We know what blockchain is. We know what cryptos are. Let's move on to slide number 10, how Bitcoin came to life. Now, this is a very interesting story. On 31st of October, 2008, Satoshi Nakamoto, the father of Bitcoin, sent a mass email to a cryptography mailing list with a link to the white paper. Yeah, the online business plan that we were talking about a few minutes ago. The title on the white paper was Peer-to-Peer Electronic Cash System. After people read the white paper, the ones that understood and saw value started getting involved, and they redistributed the email to more and more people. This is like media marketing. By late 2010, Bitcoin started being accepted by businesses, and it became very popular, pushing its value faster and higher than any other asset. The peak was reached in December 2017, when 1 Bitcoin was approximately $20,000. I will rephrase that. The peak was reached yesterday on the 16th of December 2020, when Bitcoin reached approximately $23,500.
So if you made this presentation like a week ago, it's already old news. This is how fast this is moving.
Yes. Right. So this is how Bitcoin came to life, guys. Now, by the way, don't believe every email you receive nowadays with something like this, because the probability of you discovering the next Bitcoin is slim to none. Am I right, George?
The next Bitcoin is Bitcoin.
Okay. All right. So this is how Bitcoin came to life. Let's move on to slide number 11. Trading Bitcoin as a contract for difference. Trading Bitcoin as CFD on a trading platform. Obviously, nowadays, most Forex platforms have integrated cryptocurrencies as CFDs. They are available for trading as any other asset. But due to its high volatility, the leverage offered won't be as high as on other asset classes. Yeah, the European Securities and Markets Authority, or ESMA, has announced that it will impose restrictions on the leverage offered for contracts for difference and offered to European retail investors. Under the new measures, the leverage offered on cryptocurrency CFDs will be limited to no more than 2-to-1 or even 1-to-1. Wow. Other jurisdictions are a bit more permissive, allowing a leverage of 3-to-1 up to 5-to-1, but no more than that. Wow. We saw ASIC, the Australian regulator, changing the leverage. When was it? A month ago, I think. And more jurisdictions are lowering the leverage on cryptocurrencies. Why is that, George?
Well, it's a matter of protecting the consumers, I believe, because of the volatility. They have decided to turn down a little bit the leverage. And also, in order to protect the companies running these exchanges with CFDs on cryptocurrencies, they need to be able to mitigate the risks when it comes to the volatility of the market. They need to keep their capital adequacy ratios in place. So this is the reason for these regulations. It's a matter to protect consumers as much as the system in the end of the day.
All right. Very, very well said. Now, let's have a look at the other side of the coin. Buying Bitcoin from an exchange and hodling. Yeah, we're holding it for the long term. Buying and holding cryptocurrencies from online exchanges became a very popular practice once people saw the opportunity. And like any other business, where there is an opportunity for quick profits, there comes the risk. The lack of global regulation is one of the risks, as prices can vary widely from one exchange to another. Wow, and that's kind of true. On top of that, traders need to store the tokens, download the blockchain, and basically make sure that they know exactly how it works and they don't become a potential target for hackers or fraudulent exchanges that may disappear overnight, just like George told us a few minutes ago. Last but not least, buying cryptocurrencies involves a large amount of cash and is not suitable for everyone. Is that fair enough?
Allow me to disagree.
Why?
Allow me to disagree because nowadays you don't need to download the whole blockchain in order to make sure that your cryptocurrencies are safe. You can store your cryptocurrencies in a so-called hardware wallet or a cold wallet. It could even be a piece of paper, although I don't recommend that because it's very easy to have a piece of paper destroyed. And on the other hand, buying cryptocurrencies does not necessarily involve a large amount of cash because, let's take Bitcoin, for example. People are asking me, George, how much is Bitcoin now? I'm telling them it's around $23,000. Oh my God, I will never be able to afford even a little bit, even one Bitcoin. I told them, you don't need to afford one whole Bitcoin because one Bitcoin can be divided 100 million times. In that essence, even you can also invest a few cents in the end of the day. So yes, I wouldn't agree with the last sentence and not with the downloading the whole blockchain. You don't need to do that anymore. Of course, it is wiser to have a full node, having a full history, because you can actually verify immediately everything that's going on and so on. But for beginners, you don't need that. You just need a hardware wallet in order to safeguard your assets.
And some money. All right. Okay. This is the difference, between buying and holding cryptocurrencies and trading them as CFDs. First of all, you don't have leverage when you're buying a Bitcoin, but you do have leverage when you're trading on the value of a Bitcoin. On the next slide, we're going to see the advantages and disadvantages of trading Bitcoin as CFDs, because we're trying to play it fair, guys, and give you the raw information so you can decide what's best for you. Let's start with the advantages, because I'm very positive today. I'm in a good mood. Lower investment when you're trading Bitcoin as CFD because you have the leverage. High volatility. You could make $3,000 in one day if you open a buy position and Bitcoin goes up $3,000 in that day. You get the leverage, which means you're investing less money Yeah, the higher the leverage, the less money you will have to invest. Yeah, and the opportunity of making 2 to 5 times more profits with the use of leverage. These are the advantages. Now, to play it fair, we're looking at disadvantages: high volatility. If you get caught on the wrong side of the trade, that's it. You can get wiped out in no time because the volatility on cryptos is extreme. No option of making payments, which is correct. But on the other hand, if you want to trade it, you're not really looking to make payments with it. So it's up to you to decide if that's a disadvantage. And not available on small trading accounts. Again, I don't see it as a disadvantage. Personally, I see it an advantage. Otherwise, many people will get wiped out in no time. Is that fair enough, George?
I would say that yes, that is correct.
All right. And now let's see advantages and disadvantages of buying Bitcoin from an exchange and holding it. Advantages: no trading required. High volatility. Yeah, you could have spent 20 grand a couple of days ago, or 19,000 on Bitcoin, and today, 3 days later, you already have $4,000 profit. You have an option of making payments. If you go on a holiday somewhere, and God forbid, touch wood, you lose your wallet in Brazil, how will you pay for the hotel? What will you do? If you have Bitcoin, you can pay, for the hotel or whatever you need to pay with Bitcoin. And this being said, you have the option of exchanging it into cash. Okay, so these are the advantages, which are very interesting. Now, disadvantages. And now, George, I'm going to need you to back me up with the disadvantages. Higher investment than trading them as CFDs, correct?
Why would there be a higher investment?
Assuming you want to go for a full Bitcoin.
If for a full Bitcoin, yes, you'll need the full amount. But if you have like 100 euros and you need to buy some crypto, you can buy with 100 euros, $100, whatever.
You're going to make 20 cents. I'm talking about scaling it. One Bitcoin. We're talking about full measures. High volatility can be a disadvantage. Because we know volatility is a double-edged sword. If you're caught on the wrong side of the trade, it can work against you.
If you're on the wrong side of the trade, yes, it's a disadvantage. Leverage is always a two-sided knife. It can cut you. Sword,
The lack of regulation, the lack of global regulation, could be a disadvantage.
Well, of course, yes, it could be a disadvantage, especially if you're, going to shady exchanges. But there are some regulated exchanges right now that provide, consumer protection in this way.
They've adapted recently, and many cryptocurrencies disappeared due to poor functionality. This, I think, I don't know if this applies today, but it definitely applied last year and 2 years ago.
Well, that is correct. Many cryptocurrencies are introduced into the market, and then a lot of cryptocurrencies are also disappearing from the market because their value goes to zero. But of course, if we look into Bitcoin and the top 1, 2, 3 coins, so then you don't see that happening. So stay away from the so-called altcoins. I would put my focus more into Bitcoin and Ethereum at the moment.
The established ones, yeah. And what's that called when they go up in price and they disappear very fast? Pump and dump, isn't it?
Pump and dump, yeah. So basically, you have a manipulation of the market. You have whales that are pumping the price, and when they reach high levels, then they just dump it into the market. They sell everything, and as a result, the cryptocurrency collapses in value.
Just like it happens with some stocks, yeah. Therefore, the similarity.
Of course, yes.
Okay, right. So we try to play it fair. These are the advantages and disadvantages, guys. You need to make an educated decision, and this is why we're here tonight. And here we are, guys. Time for the Q&A. I see we have some questions tonight. Spidey videos. Spidey has questions. Where should I invest? Spidey, contact us for a consultation if you don't know where to invest or what to do, and I'm going to make sure you get all the right answers. Now, we have more questions, guys. And I'm going to start with a question for... Where is it? I lost the question. Where is it? Okay, there we go. Dennis, my client from South Africa. Well done, Andre and George. Now cryptocurrencies make a lot of sense. Thank you for the kind words, Dennis. Right, let's... okay, Marco is asking, would it be a good idea to buy Bitcoin now? Considering the rally, I think.
Well, it always comes down to your investment horizon. So if you're looking into the next 5 years to hold that Bitcoin, then I would say that maybe yes, that is a good decision. But if you're planning to hold it for 1, 2 days, maybe it's not right now the best moment to buy at an all-time high. Maybe it would be better to just wait a little bit, see how it goes, and then enter the market.
Right. Thank you for the answer. Krishna is asking, why is the leverage so low on cryptos? Do you want to answer or do you want me to answer, George?
Please go. We went over this before.
Yeah, exactly. So because of the volatility, guys, okay, conventional asset classes have certain support resistance levels, have certain things that make sense, yeah, when we're talking about world economies and so on. But when we're talking about cryptocurrencies, we saw that Bitcoin can rally $4,000 in both ways, by the way, in just a few hours. This is unheard of in the conventional asset classes. So for your own protection, for the brokerage protection, the leverage on cryptocurrencies is lower than conventional asset classes. Okay. Right. Mr. Patel, how are you, Mr. Patel? Mr. Patel is asking us, where is Bitcoin going now? Good question. Where is Bitcoin going now? We're in uncharted territory.
That everybody has in his mind right now. I don't know. I really don't know. And I don't think that anyone in the world can actually tell you at this moment. We see that the trajectory is upwards. So we're seeing at the moment right now that it's going up. And we know that the trend is our friend. However, exercise caution at all times. This is not an investment advice.
I'm expecting for that pullback, to be honest, because I saw it happening many times, and I'm expecting for a tiny correction on Bitcoin, and from there on, God knows, I don't even know. And people call me the chart whisperer, and I can't even tell where Bitcoin is going.
To be honest with you, because I'm waiting for that dump in the market, that correction. So I want to capitalize on the correction as well. But let's see. The thing is that Bitcoin never sleeps. And we need to sleep. So yeah, we need to also employ, algorithmic trading tools in order to help us, so that we are always in the market, let's say, and always capitalizing. But of course, that is very hard to achieve.
Talking about we have to sleep. We've been 1 hour into the webinar, guys. We're limited to 1 hour. Let's take one more question, and then this is going to be it for tonight. Alex is asking, what brings more profits, Forex trading or crypto? And that's a good question. That's a tough one.
It depends also on the person. For me personally, because I stopped trading Forex, yes, I would say that crypto is better for me. However, for you, I don't know. Maybe you need to find what is best for you. Every person is different. Every person has a different understanding of the markets. So see what works, what doesn't work, and what are you doing.
Yeah, very well said. I love Forex. I love the conventional assets. Yeah, obviously I like cryptocurrencies as well, but I'm passionate about I'm one of the conservatives, let's say. I would like to own about 10 Bitcoins right now or more, but as an investment, as a long-term investment. George, thank you ever so much for being with us tonight. How did you find it? How was it?
It was okay. It was a very nice, conversation. I hope that people, derive some value out of it. And my answer to the question, where should I invest? I would invest in your education. I would invest in knowledge, in understanding, so that you are worth more. And by knowing more stuff, you will be able to generate more value into the market and also for yourself.
That's an excellent closing line. Talking about learning and investing in yourself, instructfx.com, guys, if you need free consultations, free trading sessions. Right, George, thank you ever so much for being with us tonight. I'm looking forward to speak to you soon. Who knows, maybe next week when Bitcoin will reach potentially 30,000 and you're going to be even happier than you are today. Okay. And thank you so much for being with us tonight and for finding the time.
You're welcome.
It's much, much appreciated. Have a good evening. Right, guys, we have Agathangelou with us for an amazing round of market talks on cryptocurrencies. If you need any help, if you need any guidance, contact us on instructfx.com, drop us an email on info@instructfx.com, or contact me directly at thechartwhisper@gmail.com. Free trading sessions, free trading lessons, and free consultation for everyone that needs it for the entire month of December, and who knows, maybe January as well. This was it from our side tonight, guys. Thank you ever so much for being with us tonight. Join me tomorrow evening for the Gala Fidelity Awards, where InstructFX is rewarding you for learning and for watching us every night this week with amazing prizes. Join us tomorrow evening, same time, same place, and win big. This is it from my side tonight, guys. Until tomorrow, remember to trade responsibly and may all your trades be in the money. Andrew the Chart Whisperer, over and out.